All right, Nash, are you ready to hear the other side of this argument? Are you ready to pick apart Vox for the next 2 pages of notes?
Yeah, let's do that. Renting is better because it's cheaper.
Actually, I think it's 3 pages. It's 3 pages. God. All right. So this is from Vox now. I'm not gonna lie, Nash. I was ready to dunk all over this, and I read this. I was like, okay, there's some valid points in here, but I think they're misguided. So let's get into it. The stock market is booming.
That's how I feel when I read like most of Vox stuff. Because I used to read a lot of them, and I stopped because I was like, this doesn't seem like you're thinking a lot on it.
Well, they started off by saying the stock market is booming. So there's their first mistake. Homeowners have accumulated more than 1.5 trillion in equity since the COVID recession began. There's their second mistake. And personal savings are up for most higher income households. There's their third mistake. Enter stage right, Wall Street. And there's their fourth mistake. Everything on that opening paragraph is just wrong.
Fun fact. I read this from a news article. Somebody Google it if you want to check. I forget off the top of my head. I read it a few days ago. How China got added more than 200 billionaires at the height of COVID.
Wow. I was waiting for a but there, but there's no but.
No, that's it. Well, see, here's the thing. China actually now has more billionaires than the United States, but in the United States, the cumulative wealth of our billionaires is more than China. Our billionaires are worth more, but they have more billionaires.
Interesting. Okay, let's continue, Nash. We're almost over an hour here. It's important to understand that institutional investors pay it. Oh my God, I can't believe I'm actually going to read this. It's important to understand that institutional investors play a small role in the American housing market. While there are big firms for apartments and other multifamily housing units, there traditionally hasn't been the same level of investment in a single-family homes. Yield-chasing investors have turned to real estate market because it has become a very profitable place to put your money. So, traditionally, they're not, but now they are. And that's the whole point. And the main reason it has become so profitable is the pre-existing housing shortage created by local governments and certain homeowners seeking to block new homes from being built, leading to a nearly 4 million home shortage nationwide. Now, if we wanted to go 3 hours, I was going to do a sidebar into that study, but I couldn't do it. I was doing like 4 or 5 hours of note taking, and I just couldn't dig deep into it. So if you want to learn more, Google it or find the Vox article, show notes in the description of the YouTube and Facebook videos. And follow us there, by the way. Give us a like, share, subscribe, hit that notification bell. Help us out. Comment in the comments, and we'll read them out loud on the show. You can partake in the conversation. Thank you very much. Continuing. Investors go where the yield is. They are profit maximizers and force strong pressure to return large gains to shareholders. Want to stop them? Build more homes. Ensure that they cannot have a large market share and engage in predatory behavior and reduce the incentive for yield chasers to further commodify the market. Yeah, Vox. I think it's much easier said than done when lumber prices aren't inflated and people aren't fucking broke from COVID.
No, this is exactly where the shortages come into play. When the prices of steel is up, when the prices of lumber is up, when gas prices are just now starting to go down, when there's a shortage of truckers and there's an overall shortage of workers, yeah, that's next to impossible because no independent person or family can afford to do that. But you know who can? A multi-billion-dollar hedge funds could do that if they wanted to. But you know what they'd rather do? They'd rather buy the homes from people because they're already built. It'd be a lot cheaper than to build them again.
Yeah, it's like I feel a lot of this article, I feel like Vox is missing the point. They're missing the data of what's going on now, and their counter arguments just aren't that good. The idea that institutional investors are somehow largely to blame for the current housing market catastrophe is wrong and obscure the real problems. Housing prices have been skyrocketing due to historically low supply, low mortgage rates, and the largest generation in American history entering the market looking for starter homes. Many of the articles claim that institutional investors are driving up single-family home prices, are competing with average home buyers, rely on research by John Burns Real Estate Consulting. One even claimed that the investors are, quote, a main cause for the hot market, which is not what the John Burns research details. In fact, the report explicitly states that the U.S. is, quote, not in an investor-induced home price bubble today. Maybe not today, like today, June 21st, but maybe when a moratorium runs out in September, it will be.
Yeah.
Or going into 2022, it will be. The report found that the share of total home sales that come from investor purchases have actually declined over the past year. And its peak, again, over the past year. What about next year? Or this year? And even at its peak in 2013, when regular sales have bottomed out due to recession, it only reached 29% in total sales. Last year, the firm estimates that investors make up about 20% of housing sales. That includes people buying second homes, vacation rentals, mom and pop landlords, and small investors flipping home for profit. So again, historically, it hasn't been an issue. That's correct. That is correct. If you want to base your judgment based off past trends, you have nothing to worry about.
Yeah.
Who owns Vox?
I don't know. I feel like they're very independent.
Vox,
But
NBC Universal.
else.
NBC Universal.
Why have we come to a point where I can't trust anybody but John Stossel?
It's gotten to the point, Nash, where you can't trust anybody who's owned by a corporate entity, because even if Vox truly, I believe Vox believes what they're saying. I really do. But even if they didn't, they can't talk shit on private equity firms because they're people who own Vox are in bed with those firms or do business with those firms, or it's bad business to talk shit about those firms. So take Vox with a grain of salt because they're incentivized not to tell you the truth.
Especially, well, I think what we're going to highlight is for this topic. Because they are stating things, but it's important to note that they're stating things from 2019, so before the pandemic, 2013, and we're going to get some much older dates going ahead. So that's probably the biggest thing to keep in mind. It's kind of like talking about population with a census from 40 years ago.
Yeah. So research released earlier this year that found that institutional operators owned just 300,000 single-family units in 2019. Oh, good. 2019. That's totally relevant. For context, the researchers point out that roughly 15 million one-unit detached single-family rental homes. There are 15 million. So 300,000 out of 15 million. There are roughly 80 million detached single-family homes in total in the U.S. Okay. A 2015 study found that large investors make up just 1 to 2% of the all single-family purchases from 2012 to 2014, while other investors make up 18 and 19%. They also found that institutional investors are more likely to purchase homes in neighborhoods, quote, where fewer residents can qualify for a mortgage, end quote, which decreases likelihood that they are competing with regular home buyers. It's possible that this trend has changed over the past couple years, or that it could change in the coming years as institutional investors look at the gangbusters housing market and decide to get more involved. But for now, at least right now, these appear to be very small players. Oh, you think, Vox, it's possible that it could change? You think?
Well,
You just
well,
throw that in there towards the middle of the article?
I don't know how they can say for right now when they don't have any numbers for right now.
And they throw this chart in their article saying, hey, here is the data from the past few years. It goes, actually, it goes up until, so this is buyer demand for second homes continue to rise from October 2018 up until April 2021. And the red line is second homes, and the gray line here is primary residence. Now, it doesn't really say who's buying these homes. Oh, here we go. Redfin's data shows that buyer demand for the second home increased nearly 178% from April 2020 to April 2021. It's possible that a good number of those investors' purchases come from second home buyers. However, looking closely at certain submarkets, John Burns did find that very elevated investor activity in Naples, Florida. The group found that investor sales have risen 57% over the year. In Fort Walton, Florida, sales have rose 65%. And in Flagstaff, Arizona, and Punta Gorda, Florida, these increases at 50% and above in investor sales. Again, this does not necessarily mean institutional investors. They are pointing out that sales are on the rise, but they don't say who's buying them.
Yeah.
Now, I feel like they probably should. And the fact that they aren't needs to be a little suspicious, but...
Well, I mean, here's the thing, because it's the way of where you're looking at where the numbers are coming from, because you could try to look at who owns those properties there. They're not looking at that. They're looking at how many of those properties have been bought.
Yeah, but they don't tell you who bought them.
Exactly. Because if they wanted to, they could find that out by going there and journalizing a little
Journaling.
Journal. They could journal. They could journal a tidbit. Yeah, no, if they want to know, they can know exactly who bought them, because it'd be pretty easy to decide, okay, corporate entity bought this. Okay, this is clearly a home. A family of 4 lives here, but no, they just looked at who bought them and tried not to track down the answer. I mean, that's not necessarily, I don't think that's bad reporting.
They half-assed it.
I think it's a little, exactly.
Well,
yeah, that's what it is.
It's one of two things. One, they half-assed it, or two, they didn't, and they don't want to tell you the results.
Yeah, and I'm more likely to believe that they assumed the results and decided not to try to find it out.
Yes.
Which, again, this is my assumption. I could be wrong. But I feel like I'm not even a journalist, and I thought, hey, maybe if we, make some calls or just go and see who bought them, we'll figure it out.
Mm-hmm. You can fly now. COVID's over.
Something tells me at Vox they're all wearing masks.
Probably. Now we want to Laurie Goodman, who is the vice president for housing finance policy at Urban Institute, and she explained that traditionally, it's a key word there. Traditionally, institutional investors haven't competed with regular people trying to buy homes because their best investment is to buy a home that needs significant repairs. That would be, quote, very hard for an owner-occupant to do, end quote. That works for large firms because they achieve economies of scale by hiring in-house construction and repair workers, or bidding down the price by offering stable work to contractors for less for multiple homes. Quote, when an institutional investor needs $20,000 or $30,000 repairs, it would cost you or I $40,000 to $50,000 to do the repairs if we knew that what needed to be done. She then added, additionally, it's really hard for homeowners to finance these repairs. That is where the real estate comparative advantage is. And those are really the homes that they do well and specialize in. In general, there aren't homes that homeowners are looking to buy. institutional investors are actually competing with other types of investors, like regular people who make a living flipping properties. So she's trying to say is they're competing with themselves, not with the home buyer. That may be true when home buyers are also buying homes.
Yeah, and that makes sense.
Yeah.
That makes sense for the point she brought up. That makes total sense. If they want to buy a whole community that's a bit downtrodden, um, it'd be a lot easier for them. Whereas somebody who's a single home person, just one family trying to do that, it'd be a lot harder for them. That makes a lot of sense.
Yeah.
Traditionally, that makes a lot of sense.
And I think there's probably some of this going on right now because people like it's the lower middle class who can't buy a home. Upper class Americans are buying homes. They
Yeah,
can
and
do it. They're
that's
not being competed with.
yeah, that's and to clarify, Pointer, that's probably the issue with my sister having to buy a house because here in Nashville, um, that is something that you see very frequently. It's almost as if gentrification has been happening here for the last 20 years, where
Mhm.
you'll see all the homes that were built in the 70s or the 80s or the 90s are getting bought out by a group of people or one person that's got a few $1,000,000. They'll buy like half a street, redo, make the same like 2 3 story houses um, for that whole street, and then they wait for the other people that can't afford the new property taxes, and then buy their houses out.
Yeah,
You
I
stayed
know
in one of those houses, Daffy, when you came.
that I did.
You-
It's a great
Do you
house.
notice how all well? Did you notice how all those houses look the same?
Yeah.
Right? But that was probably
Well,
one person who did that for the one that you rented. It wasn't a whole group of people, but they're
well,
all
that's not too uncommon in general. Doesn't like in
yeah,
Massachusetts where I grew up, my hometown, right? Like there was this single family homes. They were all designed the exact same in a
yeah,
neighborhood or neighborhoods, right? Like you walk in, up the steps, you got a living room to the left, kitchen to the right, hallway, bathroom, bedrooms, right? Front door, there's a steps. When you walk in the front door, there's steps up and steps down. Steps down, basement, like family room to the left, hall room, bathrooms, office, whatever. That house was copied and pasted hundreds of times across Braintree, Massachusetts. That doesn't mean the
yeah.
same
No, no,
person
no,
owned those houses.
no, no, no. I'm not saying that either, but I'm saying you can tell it going on when you can compare. You can tell that in the next 3 years, that whole street's gonna be those all the same of those new houses when half of them when like a quarter of the houses are the new 3 story type structures that you see compared to the old like classic townhomes that you'd see. It's very easy to compare because those people are invested, and the growth of the city, you have wealthier people coming in and buying them.
Yeah. Yeah.
My
All
friend,
those houses.
my friend, whose his family, his house on his street is the last house that has not been bought and changed like the others have.
All right. So before we go on, Nash, I do want to make note of this Vox headline and sub headline. Are you ready for
Yeah,
this?
I love it.
Wall Street isn't to blame for the chaotic housing market. Sub headline: the boogeyman isn't who you want it to be.
Well, because that's the thing is I kind of get the tone, especially in the beginning, that they were kind of blaming middle class property owners.
Had they proven that though? I mean,
No, I don't
I
think
would
they
say
have.
traditionally, Wall Street isn't to blame for the chaotic housing market. Better headline.
No, no, exactly, but yeah, no, no, and it really is because exactly like you say, they aren't sort of taking into effect everything that's going on. I know a few people around our age that have bought houses, but I know a lot more people that are our age that want to buy houses that can't.
Yeah, my buddy Phil just bought a house. Shout out to Phil, my buddy from high school. So I was shocked when he bought a house. Absolutely shocked. But he probably makes good money. He's the engineer, so he probably makes really good money. I think he's an electrical engineer. She probably makes really good money. So anyway, neither here nor there. According to Bloomberg, Invesco Real Estate is backing Mind Management to spend up to $5 billion in order to buy 20,000 single-family rental homes in the U.S. in the next 3 years. Bloomberg also reported that another fund, one that manages Canadian pensions, is investing $700 million into single-family rentals. Business Insider reported that Redfin data showing investors spent a record $77 billion on home purchases in the last 2 quarters of 2020. That amounted to just 55,000 total homes and 39,000 single-family homes. Additionally, this included other types of investors that are not buying these homes to rent, but are buying them to fix up and sell. The fundamentals of low supply houses, low mortgage rates, and the entry of millions of millennials into the housing market armed with higher proposal savings help explain most of why the housing market has careened out of control in the past year. You want to help me out there, Nash? What does all that mean?
Yeah. Yeah, they're saying, not a lot of houses got built. Okay. And our generation is so big that's why there aren't enough houses. And I feel like there are enough houses. I feel like there are more houses that are renting than there have been. I feel like they're kind of avoiding that.
Well, I don't know. I'd ask the expert. Well, let's go to our final chart. So states where single-family home rental home companies own the most properties. You got the states here. According to the National Rental Home Council, a single-family home rental lobbying group, quote, single-family rental home companies accounted for less than 0.14% of homes purchased, end quote, and just 0.09% of net homes if you count the fact that many single-family rental investors sold homes as well. But these fundamentals are why institutional investors are likely to continue to enter these markets. They indicate that prices will continue to appear for a foreseeable future if at a less dramatic rate than the past year has delivered. They have spurned the existence to, quote, build to rent market. Instead of simply buying up existing homes, institutional investors are building them so that they can rent them out directly. Even though they aren't to blame for the current housing market calamities, it doesn't mean that it couldn't happen in the future. Thanks, Vox. Thanks for clarifying.
Yeah, it's kind of bad when they keep having to reiterate that point.
Like, it's not happening now, but it's possible. It's like we're telling you it's not. We're also going to cover our ass in case it does. So
yeah, in case a report from the day that we release the story comes out.
Yeah, they're trying to talk at both sides of the mouth. They're saying one side more loudly.
Yeah,
it's like they're pushing a narrative.
Most definitely.
So, the Vox wrap up on institutional investors. So this is where it gets really good. Institutional investors could prove a permanent floor to the U.S. housing market, ensuring that there will always be some demand to hold up the critical industry from complete collapse. Quote, when the market slows down, there is a recession. Housing is super cyclical, and institutional investors will come in and be buyers throughout that. That's from Rick Palacios, director of research at John Burns, that he told Vox. Quote, they will, in our view, help support and help put a floor on home prices. If you're a homeowner, you may in the next recession say, I'm actually thankful for these groups. The entire economy suffers immensely when home prices bottom out. So if we have an institutional industry that will soften that blow, I think that is a good thing. Nash, your rebuttal.
Well, what about the case where all these people are trying to buy homes?
and they can't compete
And they
with the
can't.
bids. They can't compete with more than half 1.5 times what a house is worth.
It totally ignore it's like, oh, they'll be so thankful when the economy crashes. Well, it's like the people that are trying to buy homes that can't right now aren't happy about it.
Like, oh, the houses will be more affordable unless they bid more than half of what they're worth, when 1.5 times their worth.
Yeah.
It's like, do you not understand? It's like he doesn't understand, or he's just pushing a narrative.
Yeah.
In some ways, it can be easier to regulate larger entities. There are formal agreements and lawyers familiar with the fair housing law and local tenant protections, and the government could audit hundreds of units en masse instead of trying to go small landlord by small landlord, which would be extremely insufficient. Since renters on average are on average less wealthy than mortgage qualifying would-be homeowners, institutional investors might be creating more housing for lower wealth Americans. Please explain that to me. Traditionally, there have been more that word traditionally. There have been no single-family rentals in desirable neighborhoods, which has made it impossible for well-off people to live in them. That could start to change. So the other good thing is, well, the government could come in and start regulating. Not if they're in the pocket of those same people buying the houses. Not if the people who are buying the houses bought the politicians.
You just have to rely on the government coming to help. That's not bad. That's a good thing.
So this opens the door for the government to be efficient. That door is going to stay closed. Traditionally, Nash, the government is not efficient. Traditionally, the government's not good at doing things.
This opens the door for the government to be efficient. Oh, tell me, how many countless doors are open then? Like,
yeah.
what?
How many doors have been presented? The government is just ignored. In fact, they took a shit on a stoop. Like, Vox, that's really your sum up. The government is gonna enforce more regulations with a Congress who sees eye to eye on everything.
Well, their whole thing is, like, it's not even saying the good right now. It's like, well, this could be good, like this whole story is past tense. When they're talking about a current issue, like, that's the major issue with this.
Yeah, they're not talking about the here and now. They just ignore it.
It's like reading a story that was published in 2009 would have the same effect and the same information as this story right here.
Well, Nash, at least they include the bad. Institutional investors' incentive to profit in return as much as possible to shareholders is the reason that to cut as many homeowners, to cut as many corners as possible. Yeah, you think?
Oh, okay.
Oh, okay. So, you think the institutional investors might cut corners?
Might.
And in the absence of government watchdogs, tenants would face much larger asymmetries of power than would the small landlords. Yeah, you think? An army of lawyers and bureaucracy, for instance, could make it more difficult for tenants who have complaints or are being serviced with unreasonable fees. Oh, you think? And if real estate prices continue to appreciate, that means the growing wealth will be concentrated in the hands of those corporations. If these homes were owner-occupied, they would concentrate in the hands of home owners. I love it, Nash. Literally, in 1, 2, 3, 4 paragraphs, they rebut their entire article, which was incredibly long, and they stuck it at the bottom where no one but me will read it.
Did. Of course, they stuck it at the bottom where anybody that read the first few pages is just going to be like, okay, it's not. It doesn't traditionally happen.
So I'm gonna ask Nash how can you have a headline of, again, Wall Street isn't to blame for the chaotic housing market, but the end of the at the end of your story, well, actually they could be.
Yeah, that's what I don't get about this story. It doesn't. This is a bad. This is a bad story because it doesn't actually focus on the present. And that's
No,
what
in
it's
the
made. That's what it is trying to imply in that title.
and they use a lot of graphs, charts, and links to studies to try and make them seem more um, authoritative.
Yeah, and that's actually, let me see this. That is. I don't know how the story is written in the present tense.
Well, it is. It was written. When was this thing written? I just took off the notes. Let me go back to my history. Watch it was like written in like 2011. Written June 11th, 2021. So 11 days ago.
Oh. Oh. And they didn't really offer any new information. They just kind of yapped a bit.
They pretty much just said, hey, traditionally this hasn't been a problem. It's not going to be a problem now, but hey, it might be. We don't know.
Traditionally, it has been a problem, but we didn't look into anything that's going on right now, so who knows?
Like traditionally, it hasn't
What?
been a problem. It might be a problem later. We don't know. We haven't looked at current trends. Vox, Vox.
Vox. See, that's the thing, because Vox does have some pretty interesting articles about stuff you really wouldn't. It's Vox. I feel like most of the reasons I've read Vox articles, it's answers to questions I never asked.